If you have a small trading account, swing trading should be your primary wealth building tool. I've got a swing trading strategy that averages over an 80% win rate, and that's not some bullcrap I made up. Here is the proven statistics of the strategy. I'll even click across a couple of different charts here just to showcase to you that this does indeed work. This is one of two main ways that I like to swing trade, and in today's video, we are going to build step by step the scanner for both of these strategies so that you have a legitimate way to find good stocks for swing trading. The number one rule I can teach you about swing trading, if you don't listen to anything else I say in today's video and you just learn this rule, I promise you you'll be a better trader for it. And that is, you cannot buy weakness. In swing trading, you're still looking to get in and out of trades relatively quickly based on their chart patterns. Those chart patterns just happen to be on the daily chart, so it may take a few days, weeks, whatever it is, but in the picture being painted to you on the chart, it is not a very long time. Take a look here at XYZ. This is one of my favorite tickers for running my back test on because it gives you both a big move up and a big move down. Well, notice how my very high win rate reversal trading strategy is buying the dip, 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 all during its strength. And then immediately it ceases attempting to trade this stock to the long side once the downside move begins. Now, the simple thing to say here is don't buy stocks when they are in downtrend. But how do you actually quantify that? You need to be able to give quantifiable values to your ideas in trading in order to be able to test and optimize strategies around them. So to do that, what I turn on is the simple moving average study, which just gives you the average closing price over the last X number of bars. It is nothing but a price action study. There's no real equations or anything going on in it. It's a very simple price action study, and I set the length to 200. So this is giving me the average closing price over the last 200 bars, and I will not look for any long plays below this line. Simple as that. So over in our scan tab, we need to add this as a filter so that we never see any stocks trading below the 200 simple moving average returned in our scan results. To do that, I'm going to go to add filter here in the top right, and we are going to add a filter of the study type. I will then click into the pencil icon of this study, and let's go ahead and hit enter. This modal gives you a little comparison operator. You've got left side, comparison, right side. So we need to say that the current price is greater than the 200 simple moving average. So we're going to click in this top drop down. We're going to go with price, and I'm going to go with close. Close also represents the current price in ThinkorSwim. If the candle is still open, is still moving, close is the current price. So close, and let's go with is greater than as our comparator. And on our right side here, we need to obviously pull in the study, and it needs to be the simple moving average study with the length input parameter set to 200. Simple as that. I will now not see any stocks in this scan result trading below the 200 SMA. We're going to go from over 43,000 results to running the scanner with literally just this one filter all the way down to only 4,800 results. That's actually a little bit nuts. We lost almost 90% of our results just by only seeing stocks above the 200 SMA. But I got Palantir and HIMS at the top of the list. I know both of those stocks, especially Palantir, just ridiculously strong, trading well above their 200 length simple moving average right now. The scanner seems to be working as intended. Now, coming back to Palantir, yes, it is up and above its 200 length simple moving average, but is now really the best time to be entering Palantir. And that's not me saying it's not likely to go higher from here. For all I know, it'll be at 200 next week. I don't know, but you're going to give yourself a better chance of winning, which is all trading is about, right? Putting yourself in the best opportunity to make money if instead of like chasing that high, you are looking to buy sort of dip opportunities on the way up. But once again, how do we quantify that? You can't just say to buy the dip. That doesn't make any sense. You need a value to build a strategy around so that you can test and optimize. To do that, we are going to introduce a second study, this time being the Relative Strength Index, or RSI. I'm actually going to immediately hop into the settings, and I'm going to change my oversold line to 40. That doesn't actually change anything about how the relative strength index is calculated. It just changes where the line highlights blue. I do that because that will be the value that we use within our scanner to say that the stock is on a dip. So now the central thesis here, buy dips on strong stocks. We're objectifying both of those conditions using the 200 length simple moving average as the stock being strong and using the low RSI value for the stock being on a dip. So back within our scan tab, working on our scanner that currently has the close greater than the 200 length simple moving average, we are now going to add in a second study filter. Once again, coming into the pencil icon of the filter and into the edit button, this time we need to say that the RSI value is less than 40. So on the left side, we need to look up the study, and we need to obviously look up the RSI. Oops, I clicked on the wrong one. We need to look up the RSI study value on the left side and say that it is less than, and on the right side, we can simply take in a value of 40. Go ahead and save this and hit OK. We now have our two filters. Strong stocks on a dip, using two very simple price action based studies to help give real values to that so that we can then build a scanner around it and build, test, and optimize a strategy around this idea. We've gone all the way. Remember, when we first ran the scanner, there was like 44,000 stocks. When we just made it the 200 SMA, it went down to like 4,400. And now with also adding the RSI, all the way down now to only 212 stocks on the list. The first one is Bank of America. If we load this up, we can see that we are indeed above the 200 length simple moving average and currently below 40 on the RSI. This is a strong stock currently on a dip. Now let's give some proof to this idea. I'm going to come into my edit studies modal and into the strategies subtab, I'm going to turn on my reversal strategy. This is a custom coded strategy that I have built and published. I'll let you know about that a little bit later, but I'm also going to turn on another custom study that I have built and published called my DTS backtest data. These are those labels that will appear up in the top left that will give us the statistics of the performance of the strategy. Go ahead and apply this. You will see now the statistics of the strategy on Bank of America. 73% win rate, $27,000, 20% max drawdown. And you'll notice that the strategy has begun entering Bank of America. That is because it is up and above the 200 length simple moving average while being below 40 on the RSI. If we go ahead and zoom out here to a little bit of a bigger picture, you can see some other examples of this happening, right? Stock is strong above the 200 simple moving average, below 40 on the RSI. The strategy scales in. This strategy is built so that it will scale in up to 10 times as long as those conditions are true and looking to get out on the first sign of price action strength. Now we're still going to go over one more strategy and obviously build the associated scanner for swing trading in today's video. But I just want to let you quickly know first that the scanner strategy and those backtest labels that you've just seen are all available over on my website, daytradingstrategies.net, alongside over 150 other custom coded ThinkorSwim strategies, scanners, studies, workspaces, conditional orders, etc., etc. There's even a handful of free codes over on the website, literally free. You'll notice nothing pops up for a email. I don't want your credit card. None of that. They are legitimately free. And I'm going to make use of this to show you how easy it is to get the codes from my site into your ThinkorSwim. Every single one of the 150 plus codes comes with one of these TOS share links. All you need to do is copy that URL back within your ThinkorSwim, set up in the top right, open shared item, paste in that URL, preview, and import. And just like that, in about 3 mouse clicks and 5 seconds, you can have any and all of the 150 plus codes imported from my website into your ThinkorSwim. And once they're imported, these codes are now yours. They are saved to your ThinkorSwim account. So even if you decide to cancel your membership on my website, you're still going to have access to the codes. You can click on this little scroll icon and you can access to read and write the source code. This is a great way to learn how to code in ThinkorSwim, or to even come in and edit what is there to help make them exactly how you want them. That's all very important to note. But anyway, you simply turn on the studies, strategies, or scanners just like you would any other. Right now, for the month of August, I am running a limited discount code over on my website, 30% off of anything you decide to sign up for using discount code AUG30. I made 30 of these codes available. 17 have already been used. So the next 13 of you to sign up can get 30% off of whatever you sign up for. Now, I do have my website set up as a subscription service because I am always adding and updating new codes to the website. You get at least 1 new code a week. Normally it's like 3 or 4 like this, and you can sign up for either a monthly plan or an annual plan. Now, obviously the annual plan is going to save you some money over your next 12 months of access to every single new code I'll add to the website. But more importantly, it gets you lifetime access to the Discord server at no extra cost. Lifetime. So even if you decide to cancel your membership, you will still be able to access this Discord server. There are always traders in here talking about what's moving, starting at 7 a.m. in pre-market all the way through the day and even into after hours. There are currently, as I'm making this video, there are currently 242 members in the server. That's a lot of eyes on the market talking about what's going on. It's a great way to make sure that you never miss a move. Just keep this Discord open throughout the day and we will be in here talking about what is moving. So join the yearly subscription. Come join the conversation. Remember, for the next 13 of you that use discount code AUG30 at checkout, you'll get 30% off your first payment, meaning you get access to that Discord and 12 months worth of access to all the codes for less than $280. Daytradingstrategies.net, linked in the description down below this video. At least go take advantage of the free codes, read some of the reviews while you're over there. Decide for yourself if this is something that could help accelerate your personal trading journey. But this isn't the only profitable way to swing trade. Returning subscribers to this YouTube channel will know that I describe profitable strategies as a seesaw. Win percentage on one side and risk reward on the other. And building a profitable strategy is finding the right balance between those two that makes you profitable out of the other side. Obviously, this reversal trading strategy is heavily focused on having a high win percentage. If you would instead rather focus on having a high risk reward, then I have a strategy for you as well. If I can go ahead and make my statistics here a little bit bigger just so you can read them a little bit easier, you'll notice here, same exact chart. This is the SPY, the S&P 500 ETF daily chart. The win percentage goes from in the 80% all the way down to 38%. Well, Trey, how do you make money on 38%, being right 38% of the time? Because the average win is nearly $2,600 and the average loss is just about $800. So this strategy is going to be much more heavily focused on the risk reward side of profitability. Now, this strategy also scans predominantly for strength. Matter of fact, this strategy looks to buy strength instead of that buy the dip sort of reversal strategy that we covered in the first part of this video. This is a continuation trading strategy, meaning we are looking to buy high, sell higher. That is why you get a lower win percentage, because when you buy high, like when you're chasing up like this, you're just going to be wrong a lot. Very often the next move is going to be down. But when it's not, and if you have a proper exit strategy that you actually follow to a T, that when you buy this sort of strength and you get into it early enough, you can take advantage of very large continuation moves that may come to follow. Once again, we're going to take advantage of a study to objectify this idea. Because once again, you can't just say, buy strong stocks. Okay, great. How do I test that and make sure it actually works? How do I build a scanner around that to find strong stocks? Once again, you need a value, and that's why studies exist, to give values to ideas. Luckily for us, this strategy is even simpler. It only makes use of one study, and once again, it is a stupid, simple price action study. I don't like to use a lot of these like really convoluted, like very heavy equation type studies. They end up lagging a lot. But all three of the studies that we've used in today's video are nothing more than just very simple price action studies. So they're not lagging indicators in the way that a lot of studies are. Anyway, the one we're going to be looking at is the percent change study, and we're looking at it based off of the opening price. All this is measuring is the percent difference in the opening price of the current candle from the candle X number of bars ago. And by default, and the length that we use for our strategy and we will use in our scanner is 14. So just simply, what is the percent difference in the open of this candle from 14 candles ago? And the entrance criteria for this strategy is that that value must be greater than 5. Not just for this bar, but for 3 consecutive bars. That gives us a little bit more legitimacy to the move. It's not just like one quick random spike. This is a multi-bar spike that has been building and is continuing to build. We have multiple bars of strength in a row before we look to enter the trade. So you can see here that on this candle, the percent change indicator is at 5.7, then at 8, then at 8.4. That is why the strategy buys the close of this candle. So back within our scan tab, starting with a fresh scanner, you can see we're back to our 43,000 total results. All we need to do is add in a single study filter. Obviously, once again, into the pencil icon, and once again, into the edit modal. We need to say that the percent change study, look up percent CHG, and we need to change the input parameter of price because by default, this bases off of the closing price. The reason that I change that is because that means that the current candle's value will always be changing. And I don't want it to be changing. I want it to be stagnant so that I know, hey, this stock is on the list. We should be looking to buy this stock at closing price today. So we're going to change this price parameter to open. And all we need to do is say that this is greater than the value of 5. Simple enough, right? Well, we need this for 3 bars in a row, right? So now we're going to go ahead and add in a second condition. And once again, study price. No, wait, sorry. What is it called? Percent change. Percent change. And this time we're going to offset it by 1. That means that we will be looking at the percent change value from the previous bar based off of the opening price is greater than a value of 5. And of course, we need to do the same exact thing. Study percent change, this time offset by 2. We will be looking at the value from 2 bars ago based off of the opening price is greater than a value of 5. If I've done this correctly, we should now only see stocks returned on this scan that have its percent change study based off of the opening price greater than 5 for 3 consecutive bars. Once again, unsurprisingly, we see Palantir at the top of the list, and obviously this thing has been above 5 on its percent change for a while now. That's good. Let's go ahead and take a look at the next one down. We have Open is the next stock down. Go ahead and type in Open. We go look over here. This thing, wow, just a huge move in this thing. So obviously the percent change has been greater than 5 on this for a while as well. There is, however, like one sort of major problem with this, and that is the strategy gets in when this happens for the first time, right? So open is currently trading at about $2.40 a share. Hell, it went up and above $5. It touched $5 a share here about a week and a half ago. But the strategy got in at 74 cents. The strategy is crushing this trade, but it doesn't really matter if it's on the scanner right now. I only want to see stocks that the percent change based off of the opening price is greater than 5 for 3 bars in a row for the first time now, so that the strategy is looking to enter. Luckily, I have recently found a pretty simple way to do this. I published this scanner, I don't know, 6, 7, 8 months ago now, and just recently I figured out how to do this. I don't know why it took me so long, but that's just how coding goes sometimes. I'm going to come back into the pencil icon of the same study filter that we built for this scanner earlier. This time I'm going to add in a fourth condition, and we're going to do the same thing. We're going to look up the percent change study on this left side, but this time we're going to set the offset to 3 candles ago. So before, 1 candle before we start looking for the percent change based off of the open to be greater than 5, we're now going to say that we want the bar to be less than 5. This should mean that the candle 4 bars ago was less than 5, then over the next 3 was greater than 5. That should be putting us in situations where our strategy is looking for entrances. We're going to go from 2027 stocks on the scan results down to now only 266. Our first stock is a 5 ticker symbol. I'm going to skip over it. Let's go down to the second stock being KGC. As we can see here, this stock was below 5 on the percent change 4 candles ago. Just got 1, 2, 3 candles in a row where the percent change is up and over 5. The next one, WLGS. If we go ahead and load in this stock, okay, these stocks all kind of suck. Can I find like a name that I recognize? A-Firm. There's a name. There's a lot of like pump and dumps on here. I will say, like, stocks like this, like low float, really pumpy and dumpy. Oh, this is even a penny stock. I didn't even notice the price, but stuff like this is really not what we're targeting with this kind of strategy, or really with any swing trading strategy. I personally, let me put it this way. You can target stuff like this if you want, understanding that it's very high risk, high reward. The kind of stuff that I like to target is stuff like A-Firm, sort of bigger names, right? I sort of target my Nvidia, Apple, Google, those Mag 7 stocks like A-Firm, AMD, Walmart, McDonald's. Those are really the kind of stocks that I look for. And there are other filters that you can add to your scanner to only show those kind of stocks. I'm just not going to focus on that today because I just want to showcase to you the price action setup ideas. But if you actually import these studies from my website, they will have those extra filters that only show the types of stocks that I personally like to trade. Anyway, A-Firm, as you can see, 4 candles ago, the percent change was less than 5. Over the next 3 candles, the percent change is greater than 5. So the setup is working as intended now. That you can go about swing trading. Reversal trading for targeting a high win percentage, continuation trading for targeting a high risk reward. And in today's video, we built scanners that you can use to help find setups that match both of those profitable strategy types moving forward throughout your trading career. Remember, if you would like to download the strategies that you saw in today's video, the scanners that will be more full, they'll be more filled out with all the kind of filters that I like to use, or even the backtest label study or anything else that you've seen in today's video. They are all available over on my website, daytradingstrategies.net. Remember, now the next 12 of you who use discount code AUG30 at checkout will save 30%. I look forward to talking to a lot of you over in the Discord server. I'm in there just about every single morning, especially during pre-market. I really like pre-market. That's where a lot of the action is. So I'll be in there hanging out, and I look forward to talking to you. Anyway, daytradingstrategies.net, linked in the description down below this video. Go sign up and become a better trader today.